Hello to all traders and welcome back to another market review brought to you by Orbex. I know that we've reported on gold quite a few times this week, but in the never-ending ups and downs of the yellow metal, we're going to see where the support and resistance lines are and where we are looking at next. Well, with global tensions easing and an uptick in the dollar, the US government shutdown, or the partial US government shutdown, has come to an end. Even though there won't be any details released yet for the NFP and jobs data tomorrow, we're not sure when that's going to be. It is a little bit more progressive news for America. If there's not another government shutdown next week, that is. So on gold at the moment, we have seen a massive rejection at 5,100, dropping roughly $50–$60 to the downside in yesterday's trading before another spike in price action in the early Australian and Asian session, which is this bearish candle at the moment, but ticking higher, trying to erase most of the losses from that session earlier today. So 4,800 has become a firm support. We're just seeing now prices just springing into action again. 5,100 obviously is the main attraction for a lot of traders to see if we can push through that and start moving a bit higher as well. We're just seeing the same kind of pattern emerge on silver, which is what we pointed out today. 72 at bottom, looking to spring higher above this particular rejection at 91 and trying to get back to the magical psychological area of 100 in the next few trading days. But like we said, with the government shutdown ending, with a little bit more of a spring in its step for the dollar, we're just seeing now prices starting to move higher. And on the index, this is what we're looking at as well intraday. We're just seeing after this move higher, a little bit of consolidation, but another uptick higher in today's early session. So we're just seeing if the dollar can get back to its lofty heights that we saw at the turn of the year in the beginning of January, as we got a bit of a rejection in the mid 99 area. But you know, going all the way back on the daily chart, we're just seeing now the index is very subdued still, but you know, it's got quite a few bullish candles on the daily chart, more than bearish. So after this massive sell-off that we saw at the end of January, we're just seeing now prices starting to tick higher. On the RSI and other stochastics, we're just seeing a little bit more of an overbought nature. So we might be looking at a bit more of a pullback or a stop for a breather. But in the near term, we are expecting the dollar to start continuing a little bit more higher after the metal market does retract a bit more. So if we do retract further, then expect possibly a move down to the recent low towards 45, 44, 4500, 4440, 4500. So this is what we're just looking at as a big psychological zone here. But that's if we do break 4800. So it is very, very volatile at the moment, giving some remembrance of how Bitcoin was, you could say. Massive swings in daily trading, you know, $50–$60, something we haven't seen in quite a long time. These small increments going higher and higher. There was consolidation, then roughly about a $40 move, $30, $20. But here, you know, we've seen some massive $100, $200, $300 moves. And then again, to the upside, we're seeing the same kind of bullish rhetoric before moving lower. So it is very volatile in the metal market at the moment. Just keep an eye out on all the fundamentals if you are trading gold and silver, because this is what's really driving price action as well. So thank you very much for joining me, and we'll speak again next time around. Bye for now.